Hey, it's Brand the Mortgage Man here, and if you've been thinking about buying a home, you've probably heard about 100% financing or zero down mortgages. Sounds great, right? You don't need to come up with a down payment, which can be a huge barrier to homeownership for many people. But is it really the best option for long-term financial goals? In this video, we're going to talk about long-term costs, equity growth, and the common misconceptions about 100% financing. Let's break it down so you can make an informed decision about whether this is the right choice for you. First things first, let's define what we're talking about. 100% financing means you're able to borrow the full amount of the home price, so you're not required to make a down payment. This is often available through certain loan programs like VA loans for veterans or USDA loans for homes in rural areas. In some cases, you might also hear about conventional zero down financing, but that's a little less common. The appeal is obvious. You get into your new home with no money down, which can make homeownership more accessible. But just because you don't have to come up with a down payment doesn't mean it's the best choice for everyone. Now, let's talk about the long-term costs of 100% financing. While it sounds tempting to not have to worry about a down payment, this often comes with higher overall costs in the long run. For one, there are higher monthly payments. Since you're borrowing the full amount of the home, your loan balance is higher than if you had made a down payment. This means your monthly mortgage payment will be higher because you're financing more of the home. The larger the loan, the more you pay each month. Two, higher interest costs. When you have a larger loan balance, you'll end up paying more in interest over the life of the loan. Even though interest rates on these loans might seem reasonable, the bigger the loan, the bigger the interest costs will be. Over time, you can add up tens of thousands of dollars in extra interest payments. Another thing to think about when it comes to 100% financing is the impact it can have on your equity growth. Equity is the portion of your home that you actually own, and it grows as you pay down your mortgage and as your home appreciates in value. If you have a down payment, you start out with instant equity in your home. For example, if you buy a home for $300,000 with 20% down, you instantly have $60,000 in equity. But with 100% financing, you start out with zero. This can be a disadvantage in the long term because you'll need to pay off more of your loan before you start building any real equity. Plus, if your home doesn't appreciate in value as expected, or if the market takes a downturn, you could end up in a situation where you owe more than your home is worth, what we call being underwater. So let's clear up a few common misconceptions about 100% financing. And the first misconception is that zero down means no costs at all. Well, just because you don't have to come up with a down payment doesn't mean there are no costs involved. In fact, you might have to pay higher closing costs in mortgage insurance, especially if you're using a program that has private mortgage insurance for conventional loans or a mortgage insurance premium for FHA loans. Mortgage insurance protects the lender in case you default, but if it's an extra cost that adds to your monthly payment. Misconception number two is that 100% financing is always a good deal if you can't afford a down payment. So yes, it might be a good option for some people, but it's not always the best deal. While it gets you into a home with no down payment, the long-term costs and lack of equity can outweigh the initial benefit. If you can afford a small down payment, it's usually better to put that money down, even if it means waiting a little longer to buy. The benefits of building equity early and keeping your monthly payments lower are usually worth it. So who actually benefits most from 100% financing? It's not right for everyone, but there are situations where it does make sense. The first would be for veterans and active duty military on VA loans. If you qualify for a VA loan, you can get 100% financing with no mortgage insurance and typically better interest rates. For veterans and active duty military members, this can be an incredible opportunity to purchase a home with minimal out-of-pocket costs. Two would be first-time home buyers. If you're a first-time home buyer with limited savings, 100% financing can help you get into a home when you don't have a large down payment saved up. However, as we've discussed, it's important to consider the long-term costs before jumping into this option. Three would be home buyers in rural areas using USDA loans. The USDA loan program offers 100% financing for homes in rural and suburban areas. This can be a great option for those who meet eligibility requirements, but again, you'll want to factor in the overall costs and your long-term financial goals. If you're not in one of these categories but are still interested in getting into a low or no down payment, there are alternatives to 100% financing that might be a better fit. One would be FHA loans. With as little as 3.5% down, you can get an FHA loan. which is more flexible than a conventional loan and offers low credit score requirements. While you still need a down payment, it's a smaller one, and you can start building equity more quickly. 2. Down payment assistance programs. There are various state and local down payment assistance programs available, especially for first-time home buyers. These programs can help you cover some or all of the down payment, reducing the financial barrier to homeownership. So, is 100% financing a good option? Well, it depends. While it allows you to buy a home with no down payment, it can come with higher long-term costs and slower equity growth. For some buyers, especially veterans, rural buyers, and those in special loan programs, it can be a great option. But for most buyers, putting down a little money up front and avoiding 100% financing might be the smarter financial move in the long run. If you're not sure whether 100% financing is the right choice for you, don't hesitate to reach out. I'm Brand the Mortgage Man, and I'm here to help you navigate these tough decisions. If you found this video helpful, make sure to like, comment, and subscribe for more mortgage tips. Thanks for watching, and I'll see you in the next video.